We have Danny in Pickering on the line. What's your question, Danny?
Good evening, gentlemen. Thank you for taking my call. My question is on Alibaba and also what the U.S.-China trade dispute can do to the stock. Thank you very much.
Okay. All right, Baba, did they get caught in the crosshairs?
Danny, let's look at this two ways. Okay, first of all, clearly a Chinese company, one of the most important Chinese companies, and we look at, say, equities in China, we track the percentage of stocks within that region that are performing constructively from a technical perspective. And that has been steadily weakening, of course, over the last 18 months. We're now down at a point where only 16% of stocks in China have any kind of upward bias. So that is getting pretty sold out. So I do watch that group pretty closely because when we see bread start to expand, we're going to start putting money to work. But when we do, we tend to buy those that have held up better than the rest. And while Alibaba held on longer than most, made a new high most recently in June, it eventually broke down and broke support. Support was around $170. So two things. One, I need to see China start to firm up because it's going to be unusual for BABA to do well if the Chinese market continues to be under pressure. And second, I would like to see the stock back above $170. So right now we're sitting at like $160. A lot of people say, well, the U.S. market can't do well while China is doing so poorly. You know, that gap has to close. But, you know, back in the mid-90s, 1994 through 97, Chinese market went dead sideways and the U.S. market was rocking. I would say we're in one of those worlds where the U.S. market has the benefit of the doubt right now. I'd focus in the U.S. I'd focus on Amazon.
We have Doug in London on the line. What's your question, Doug?
Yes, good evening. My question is on BCE. It's around its 52-week low right now, and I was just wondering your guest view on it in the next year or so. Should it come back, or should I maybe think of getting out of it? Thank you. Bye.
Yeah, BCE has not had a great year. The stock down 14% year to date.
Yeah, look, even with the telcos having a bounce in the summertime, BCE did not. And so I would say that it's one of the weaker players in a group that is under pressure. Rates going higher is going to be tough on BCE because people buy it basically for the dividend. There's not a lot of growth there. If I were going to buy a telco, you know, I suppose it would be TELUS, but I wouldn't be buying a telco right now. So I think there's better places to look.
All right, of course, BCE, ultimately the parent company of us here at BNN Bloomberg through the Bell Media division. Scott in Cambridge is on the line. What's your question, Scott?
Oh, good evening, gentlemen. My question is for you, David. It's on TD Bank. My question is that TD, their fourth quarter is November 30th, and I don't think they're going to miss on their estimations of about $1.65 roughly, and that would bring the value of the stock up to around $87 range. Would you foresee that in the next, 2 months, November 30th, for fourth quarter, that TD would be able to, the value of the stock would hit that target of $87? I'll hang up and listen to it. Thank you.
Great. So, Scott, off the top, you know, I would say, given a choice, I probably would prefer to focus on a U.S. bank right now because I think U.S. economy has just better dynamics. But having said that, if it's not going to be a U.S. bank, let's buy a bank that has a lot of U.S. exposure. And so of the Canadian banks, we own TD and we own BMO. And we own both of them because they are shifting their focus on growth in the U.S., and they're doing a great job. So between TD and BMO, both have excellent loan growth in the U.S. right now. They're really benefiting. TD's been quite aggressive. You get paid pretty well, 3.4% yield. And stocks trading close to the highs. It's trading better than 80% of the S&P 500 so far this year. So I would give it the benefit of the doubt because I do expect a market rally through the fourth quarter. I think there's a bit of a performance chase coming. And a lot of people have been underinvested most of the year, and the market's taken out the highs, and they got to get positioned. So I would own the stock here.
We'll be back with David Burrows, President and Chief Investment Strategist of Barometer Capital Management. Wants to answer your questions on North American large caps, so give us a call. It's toll free. 1-855-326-6266.